Let's begin our first session of the day. Product development, who is it really for? The real answer, as somebody said to me on LinkedIn last week, you may have seen it. It's a balance between the customer, the intermediary, and the manufacturer. But looking across our market, have we got that balance quite right? And are there other factors we should consider? Compliance departments, marketing departments, comparison sites, product comparison services, networks, and more. Not to mention the ombudsman and the regulator. Let's get specific. We're not on the panel because we do not have waiver of premium. Does the customer really come into that decision process? How many policies had waiver? 1 in 5? 1 in 10? Less? What about standalone CI? Yes, there are some rare conditions where life cover might be rated more than CI, but it's incredibly rare. What about joint life cover? I've lost count of the reasons we should stop recommending this to couples. And that was before the great Johnny Timpson told me about how it has now become a direct cause of economic abuse. And I can still hear the brilliant Robert Sinclair on this stage last year when he said every time we add another option, another yes or no feature, it's another mortgage broker who won't sell protection. So is what we're doing today growing the market tomorrow? If we follow this trend, what does it all look like in 5 or 10 years' time? Some insurers, of course, have tried to be different and brave, but then some advisors don't sell it, even if they ask for it. And maybe reinsurers make it a bit more expensive because it's new, and maybe portals don't know where to put it. Where's the customer in all of that? Some argue we've become obsessed with what we do as companies and being better than our competitors. And that's okay, maybe even good. But have we forgotten about the customer in getting there? We can all do research that shows how pretty much anything is good for a customer, but it's not if they're not buying it, and it's not if they're not keeping it. And does all of this ultimately result in a lack of innovation? As somebody far better than I once said, the price of originality is often criticism, but the value of originality is priceless. Before we debate these issues, you'll hear from 3 very different speakers, including our first speaker, who isn't from the protection industry at all, which is quite deliberate. Penny Power refers to herself as an accidental entrepreneur. She joined the technology industry back in the 1990s and is famed for creating the first social media intended entirely for business use, preceding the creation of LinkedIn, of course. Penny is a highly respected businesswoman with a strong background in sales and marketing. One of the most influential entrepreneurs of 2019, and I'm thrilled that she can be here today. Please welcome to the stage, Penny Power.
Amazing. Mike, that was so tremendous and so moving and so critical for the way that I want to get my message across. I think what you said was just so brave and moving and something I don't think any of us will ever forget. And what I think is so powerful about so many of the things that Mike said is that it's not that they're asking for attention. They want to be seen, they want to be heard, they want to matter. And that really is what the essence of my conversation is, that we have lost humanity in a world that is so driven by technology. And we have become so lonely and isolated as individuals. And what I really want to get across today is loneliness is not the responsibility of the parent, or even the siblings, or even the loved ones. It is all of our responsibility to help people feel that they matter. And therefore, anybody that has depression, anxiety, suicidal thoughts, suicidal attempts, it's society that needs to support them. And each one of us are a member of society. We are citizens. And how I express that through life is through community. And it's a word that I am so dedicated to in my life, and over the last 30 years have worked in the business world to create community. And that's what I want to talk to you about today. Essentially, community is something that can be misused as a word now, as many words are being misused. People call networks community. And as someone who built the first social network in the world in 1998 and built it to 650,000 small business owners, I know the difference between a culture of love and community and the almost utilization of a network. And you don't feel connected or attached to a network. You feel connected, loved, and attached when you're inside a community if it is working properly. There are over 12 billion searches for the word community at the moment. And that says something, I think. And what are we reaching out for? And when is a community really a community? It's when you have a sense of belonging to something. It's an emotional word. So I might use LinkedIn, for example. It's fantastic. But do I get a sense of belonging when I step into it? Do I feel that I matter to anyone when I step into it? When you belong, when you have a sense of belonging, you get the emotion of love. And love is a human need that we all have. No matter what our characters, no matter what Belbin, DISC, Myers-Briggs, whatever psychometric test that we take, we all have a deep need for love. What thing drives us most in life, actually? Is it love or is it fear? And we all know that the media and sometimes the way that people market and communicate themselves, fear is something that has entered society at an unprecedented level that creates anxiety, depression, loneliness. It might drive us to take an action, but is it the right action? I thought I would show these two messages that I received and the contrast of them. And I don't know whether you can read them particularly effectively, but Barclays Bank, who I've banked with since I was 13 and opened my business bank account with and have a very successful business revenue running through it as well as savings, sent me a letter out of the blue, no notifications on an app, telling me that I had to contact them to update some information, otherwise they would close my account. That arrived on a Saturday morning, and as a business owner and a parent, the concept of them closing my accounts was pretty damn frightening. Yes, it made me take action. On the Monday morning, I had to cancel an appointment with a client, spend 90 minutes on the phone to get through to them, to be told the issue is actually theirs. It's some regulation around making sure that their clients aren't laundering money. In contrast, 2 days later, I had a need to speak to Amex, and on a chat box with Amex, I felt love. They used emotional words with me, they honoured me, they responded fast, they were amazing. And I think as a company, do we want to associate our communication with our staff, with our stakeholders, with our colleagues, with our consumers, with our channels to market, with fear or with love? So my reaction was actually rarely, I do this, but was to go on Twitter. I go on Twitter quite a lot, but rarely do I go on it to be angry, sharing how unbelievably furious I was with them to treat me like that. Whereas my reaction to Amex was to pour more love into that person that helped me, to say how grateful I was to them, to give them love, which hopefully spurred them on for their day. So one creates the action, the other a reaction. And emotion actually stands for energy in motion. So what is the energy in motion that we're wanting to create around our business? The issue is that the world has become so efficiency, so productivity, so automated, so driven by technology, that we have completely lost focus on people, and people need love. And every single one of us is responsible for that. When we When we step into a supermarket and somebody serves us, when we're standing in a lift or on the tube, how kind we can be to one another. We are all responsible for every single piece of energy that we put out into the world. But I don't think enough of us take responsibility for that. And because often we're all sitting in fear, we've all become individualistic. We've all become fighting for ourselves. And we've forgotten that actually, if I'm in a world of a community with people, when I rise, you rise, and we all rise. And this is the principles that I have applied to my business communities for 30 years. And the loyalty, the goodwill, the social capital, the joy inside our communities is phenomenal. My work never feels like work. When I was 8 years old, I remember going into Woolworths with my pocket money to buy some sweeties and to buy a single. In those days, obviously, we went in and bought our single. It was something I got very excited about once a month. I remember turning to my mum when I left, saying to her, "Mum, that lady that I bought on the counter the sweeties from wasn't very happy. Whereas the lady that sold me the record was so happy. Her day must go so much faster than that lady's day." And I was 8 years old, and I know that because my mum reminds me of it. We are all so driven by the frequency of others and how we can actually turn our own lives around by starting to use the energy of love and moving from this robotic attitude that we have in business to a much more human one. When I was 19, I had failed to get into physiotherapy and actually failed to get into nursing, academically, interestingly. Despite being somebody who really wanted to love and care for people, and from the age of 12 to 19 had worked in a physiotherapy department at weekends and holidays with cerebral palsy children. And I found myself on a telesales, selling computers in a telesales bank. I was given a script and it was just not me. So the first person that I sold to was a guy called Roland Hewlin, Data Systems Electronics in Tolworth. And it went like this. "Hello, Roland here. Hi, my name's Penny Ross." My name was Penny Ross at the time. "Are you okay?" And he said, "No, I've got a bad throat and I don't feel very well." And I said, "Oh, I'm really sorry to hear that." And I said, "I'm really embarrassed because I'm actually ringing to try and sell to you, and I bet you don't want that." That was not on the script. And he said, No, I don't really, but you sound nice, so what's your name?" And I told him where I worked at Bytech. And he said, "Oh, give me a call in a few days." So when I went out at lunchtime to buy my lonely little sandwich and sit in a lay-by eating it, at this sandwich shop was some tunes, some coffee sweets, and I thought about Roland, and I went back and I said to my supervisor, "Can I post these tunes to Roland?" And she looked at me like I was an absolute idiot, and she said, "Absolutely no way, what would you do that for?" She said, "The cost," she said, "the franking machine, the cost, no, that's not what we do here." So I said, "Can I do it? Can I pay for it?" So I got my purse out and I paid the admin secretary for the postage and the jiffy bag, and I sent them. 3 days later, the phone went, and it was Roland, and it was passed through to me, and he said, "Penny, I'm back at work now, get your pen and paper out." And he was a computer dealer, so he had a whole load of stock he needed, and he gave me the most enormous order. And I went over to Suzanne, my supervisor, and I said, "I don't know how to put this in. I've never put in an order like this." And she said, "How on earth did you win that?" And I said, "Well, that's Roland. I did send him the cough sweets." At 19, I learned that if you treat people as humans and not with scripts, the impact is amazing. And I had a phenomenal career in the IT industry as a woman, purely using love and being a servant leader to the people that I work for. When I step into Starbucks, they ask my name. You might think, well, that's just a process, but I like it. They're also, as staff, empowered to give you a free coffee if they want to. And I've experienced that as well. When I step in Costa, they don't know me. These are just processes. So I have a strong, validated belief that love in business works, and I've also proven it in my business life since I was 19, which is 39 years ago. I'm 58, so you can save your brains. Community is the manifestation of love and emotion in business. And I created the first community in the world 4 years before LinkedIn, 6 years before Facebook. And I will dispute whether or not LinkedIn or Facebook are communities. And in fact, I will dispute whether or not they've actually cared about the mental health of the people that use it. More so aimed at Facebook and Instagram and TikTok and all of those companies. I know that the mental health of our students and our young people is very much down to the fact that technology is driving messages at them and keeping them awake till 3 o'clock in the morning because they're so obsessed by it. So really, who cares about any of us in an individualistic society? Which company really cares about me? When my husband had cancer 4 years ago, and I was insured with AXA, did they ever say to me, is your husband better now? I'm glad we helped you through it. Is there anything else you need? No. When my daughter was raped and abducted by 3 men, I went through the most hideous process with the police. Absolutely no emotion. And when I asked the policewoman, why is this? She said, I'm sorry, it's just the procedure that we have to go through. Exactly the same sort of experience that Mike talked about. People have lives behind them that when you're in a business world, do not go away. You cannot say, this is who I am on Facebook, this is what I am on LinkedIn. You cannot say, I am a different person when I step into the work environment. Your staff need your love, your IFAs need your love, your clients need your love. And it means having a community mindset and considering that. In a disconnected, lonely, task-oriented world, we are completely screwing everybody up. And ultimately, we're screwing our company up because we have 90-minute call waiting, making our clients angry. We have mental health issues that are causing the most phenomenal amount of days off. There are 3.5 million people currently off work because of anxiety, depression. Tell me that's not affecting a company's bottom line. The lack of loyalty that people have to their company, remote workers now, people who are quiet quitting, as you probably know the phrase, where they're doing just enough to get their salary, but they don't care anymore for their company. So these scripts that people have that dehumanize, can you remember on Friends, Phoebe, anybody put your hand up, you remember this? Yeah. Phoebe went in and was taught how to sell toner. And she had a script, and despite this poor man telling her that he was about to go and commit suicide, she carried on with the script. It's a joke, but it is a reality. It's a complete reality of what's happening. Our staff, our customers, and our channels, they all have huge human needs. And these human needs are as follows. We need certainty. We need to feel safe in an unsafe world. And we need to feel that we matter, because that gives us certainty. We need to feel significant to others, not just our parents, our loved ones. We need to feel significant to our colleagues. We also need a bit of uncertainty, weirdly enough, because we need stimulation, excitement, innovation, something that stretches us. We need love, we need to feel we're growing, and we need to be able to contribute to others. It's not a one-way street. When people apply to our community, we spend about 4 hours interviewing them before they can join our business community. And when people come and say, well, I just want to give, actually, I don't have any needs, I go, Because if we're not willing to receive and only give, then we create a world where we only have givers and nobody that can receive. Well, if you look at that, nobody's there to receive and nobody want to give. We have to have vulnerability. We have to be sharing that we need needs. And we need to be in a society and in a company where our vulnerabilities are met because we're able to talk about our fears and our vulnerabilities. So communities create belonging, trust, love. They do create innovation. My business innovates all the time because I'm so close to my customers. I know exactly what they need. I can hear them. I know what they need, and I innovate from that place. So a community bonds people, allows the human needs to be met, and shows we all care for one another. And critically, when we matter to others, they then matter to us. And it's a circular, beautiful world. In 2018, I had a slight mental breakdown. I'd had massive financial challenges through our business academy coming to an end in 2012. LinkedIn and Facebook won against they're just giants, and they won financially. My brother died, my niece died, my daughter got raped, my husband got cancer, and despite that, I was working excessively. So I ended up going to a psychologist and I wrote a book called Business is Personal. As a result of that book, I have attracted towards me the people I want to serve and help. And it's all about me being open with the mental health journey of being an entrepreneur and helping others through that journey. So as I close off, if any of you are wondering how in this session this is anything to do with innovation, anything to do with how you can grow your business, let me just remind you of this quote from Henry Ford. When he said, if I had asked people what they wanted, they'd have asked for faster horses. Of course, he developed the first car, and now look, Elon Musk bought community through Twitter and owns now the most successful car in the world. Community and caring for people, it really works. And I hope that today, through some of my words, you consider innovating with the use of community. Thank you very much.
Our second speaker, please welcome Lizzy Lubczanski is a Client Solutions Manager at Swiss Re. She has a PhD in psychology and spent 7 years in Swiss Re's behavioural economics unit, apparently running what she describes as fun experiments with global insurers. Please welcome Lizzy to the stage.
Thank you for the introduction. Thank you to the previous speakers. Penny, your name is a superhero name, and you're a superhero. I think that was an unbelievable talk. So thank you so much for the lead-in. I'm going to follow on from that theme about understanding our customers. And as Kevin mentioned, my background is in psychology. I think there's an interesting perspective we can give to the way that we design our products if we think about the way that we've asked our customers what it is that they wanted before we design the product. And Kevin also kindly gave me a bit of a lead into some of the background as to what situation we're currently in at the moment. So he also stole my first joke, which was that it's going to be a really short talk because, of course, we design all our products for the consumer. But I think anything that I'm going to bring up today, trying to bring in this perspective about how behavioral science makes us realize that we're not necessarily so brilliant at understanding what drives our behavior, and therefore as insurers we're not so brilliant at understanding what our consumers really want or need in their product. We shouldn't be too hard on ourselves. I think we're writing lots of protection. We're on a journey, and generally we're making good head at trying to understand our consumers. So anything I say today, I'm pretty sure is inadvertent. We all intend to do things with the best interests of our customers. But there are other reasons why products do get designed, and Kevin mentioned this. There are other people that we maybe have in mind or who are incentivizing us to design products in the way that we do. As well as the fact, as Kevin mentioned, that we want to be able to differentiate ourselves in a competitive market. But also from a psychological perspective, we often, I think about designing insurance products because we think rationally that customers should rationally want/need to have insurance products the way that we design them. And Kevin also mentioned a bunch of examples where we do design products that if we put a really strict lens on looking at whether these products are actually in the best interest of the customer, that potentially they're not. And I'm pleased that you picked out some other examples than the ones that I put on here. A couple that are quite close to my heart, I think products with lots of CI conditions is one that comes to mind where I just think it's so much easier to be able to compare products when we can see how many more conditions that they cover. But if they don't have a price difference, does it actually mean that there's a risk to the customer for the conditions that we've added on to try and differentiate our product? And does it then just confuse the customer, or does it distract them from what really should be the most important and relevant type of protection for them? So something to think about. Similarly, I feel quite strongly about value-added benefits. I do quite a lot of my work at the moment thinking about how we can provide our customers with add-ons in relation to health and wellness, mental health, for example. I've actually seen research that shows that if you actually do ask customers, they don't really want to receive access to a wellness tracker or anything from their insurer. And there's lots of hysterical examples of research that show that when we've given free wearables out to customers, the uptake is really, really low, the engagement is really, really low, and again, potentially just at risk of confusing customers, distracting them from really focusing on buying a product that has the right amount of protection for them in it. And also maybe just creates a slightly weird dynamic between us and customers when we're asking them to provide data about their health and so on. So I've got 3 potential reasons why it might be that we find ourselves producing products that don't necessarily have the best interest of the customer in mind. As I say, inadvertent. And I think we start with the fact that I think we assume that we know what customers want. So we have an implicit assumption that the customer is a rational agent who's going to be motivated by money, who will make their decisions based on the amount of information that we can give them, because that's what traditional economics says. And I think that we think that people should rationally really want a product that's at the lowest possible price, it's got all the value-added benefits, maybe it comes with a wearable, and maybe it can fluctuate with their needs, a really nice short journey, and all the things that we think that's a good idea to put it into a product. But I'm sure many of you in the room, including at Swiss Re, have seen examples of products that have elements of these product features, and they don't necessarily always succeed. So I think we just think that if we build, they will come, and that's probably because we're building for a customer who is rational and therefore probably doesn't really exist. And that's, behavioral science talks about the fact that we make the majority of our decisions using a very automatic part of our brains, which is heavily influenced by context. And subsequently, we find ourselves having a very big gap between our intentions and our actions. So surely if we're not very good at understanding other people, we assume that our customers know what they want. So maybe we should just ask them what they want. And we've all had experience of doing different types of consumer research and seeing how successful that is or otherwise at producing products that our clients then end up buying. I think this is an issue that we have, is that we ask customers what they want, we build a product, and if they don't necessarily come flocking, we're left scratching our heads trying to work out what it is that went wrong. And I think it's because people are quite bad at knowing what motivates them. And it's not just so much that consumer research asks people to access the very rational parts of their brain, which requires them to then predict their own future behavior. And we're not very good at actually predicting what we're going to do in the future because of this intention-action gap that we have. But also I've seen examples where consumer research can be done so well and so globally and large scale that by the time you've actually finished it and you make a product off the back of it, it's potentially just lost relevance and is a little bit out of date. And I think we also see flaws in some of the traps that we fall into in consumer research, where we maybe don't necessarily really think through who our target market is, let alone make sure that we're sampling them in our research. And finally, I think we can fall into the trap of just using research as a way to validate ideas that we already have and just confirming what we thought should be the case rather than really listening to what people are saying that they want. So if the fact that neither us nor our customers really know what they want, there are other reasons why I think we struggle to produce really customer-centric products. I think, and this has been brought up already today, but I think when we want to try and build something that's a bit different and innovate, it can maybe make it harder to compare and therefore make it a bit harder to sell. So subsequently, comparison might be ending up really stifling our opportunity to innovate. I often think about something like non-advised insurance as the way to really make that the most customer-friendly way to make sure that we're really putting customers in the centre, giving them what they want. They've got all the control. But I think also it means we do put pressure on people to very correctly put the value on themselves and understand what they are at risk of. I think it's something that really has to be done properly. So as much as I'd like to have thought that that might be the silver bullet, I don't think it is. I think the final piece is that as an industry, even though we have come a really long way, I think there is still a bit of a historical mentality that if we write to our customers or communicate with them, they're going to suddenly remember that they've got an insurance product and then they're going to cancel it. And whilst I think we are getting better at it, I do think we need to still come quite a long way in feeling really comfortable to communicate on a regular basis with our customers without worrying that that's going to make them run away. So what I wanted to share today is just a few tips maybe. I have no idea how long I have, by the way, so someone just shout at me if I'm going to run out of time. A few tips and a few potential solutions of how we might do a better job at understanding our customers better, taking on board everything that Penny had said as well. The first is to maybe just try and think of other ways to understand our customers rather than always asking them, what do you want, what would you do, how would this make you feel if you had a product like this, etc. And it could be that there are certain ways that we can look at data and scientifically, and when it comes to human behaviour, past behaviour, is the best predictor of future behaviour. And I've been involved in some consumer research in the past where you literally only ask about things that have happened in the past and you correlate them instead of asking people to effectively predict their own future behaviour. Secondly, this point about consumer research, I've seen examples where we come away from using the very large-scale, very broad research questions and research topics and instead focus on something really, really targeted. It might be that you do this in a very iterative way, having multiple rounds, where you just ask the question that's important for you to design one element of that product, rather than necessarily trying to do a large-scale piece of research that's going to cover every element of the product that you're trying to design. If you are going to do consumer research, I do recommend finding out a bit more about behavioural economics. There's lots of people I can point you to who can talk about it more eloquently than me, lots of things to watch and books to read. But if you do bear in mind the fact that context impacts our behaviour, then you think about how you might ask the questions, thinking that maybe you might be biasing someone to say something in that consumer research question that they otherwise wouldn't have said. Some of my colleagues have been using some fancy digital tools to make their consumer research try and minimise this risk of bias when they use things like mobile ethnography, which is where you can actually take through a mobile phone someone through an experience of buying an insurance product where throughout the course of a week they can be giving you regular feedback as to what's going through their minds as they're going through an insurance consideration process. Or just user research digital tools where you can watch your consumers make their decisions rather than asking them about their future decisions. And the other piece is just to look at other industries and learn from them, those who are really obsessed with their customers. I don't want to plagiarise anyone else who's stood on a stage at a recent event in the industry before, but I do really like the example of Tesla, who brought their car showrooms into shopping centres, really thinking and loving and caring about the consumer enough to make them not have to go out of their way to think about buying a car. I think the alternative that we're going to have is that people are going to end up giving their money to these other industries who do a better job at understanding what customers want and need, and we'll end up in a situation where people have spent their money there instead of on their protection. So just as some concluding thoughts, I think the insurance industry might not historically have been the ideal place for really thinking about customers, but I do think we're on a journey. But we have to be prepared to make some sacrifices, take some risks, and think about what some of the changes in philosophy and appetite we might have to have in order to really make a change in the way that we design our products for our customers. As I say, I think the alternative is that we'll risk people not being protected because they've been inclined to spend their money elsewhere. But also, it's much better that we make change from within rather than have it imposed on us by regulators. I finally get to say the words consumer duty. I've been dying to for the last 10 minutes. But I do think it's going to help us. I'm really pleased. I think it will really force us to go out and speak to our customers, make sure they understand what on earth we're going on about. So even though we don't really want to have change imposed on us, I do think that these tools will help us get further along in our journey. And another sort of parting message is to say, let's make sure we don't assume that product development ends when we've designed and launched a product, but making sure that product governance, fair value, is a continual process where we're always keeping our customers in mind. So I did want to end on a fact given to me by my colleague Ron Wheatcroft, that we have written 2 million new policies in 2021 and that the group market provides cover to 14 million, which should make us feel better. I didn't want to end on too much of a sour note that we've got a long way to go on our journey, but very happy to talk to anyone throughout the day or the evening if you're interested in the topic. And I've no idea how long that took, but hopefully that was within time, so thank you very much.
Our third speaker this morning, David Owen, began his career at Legal & General and has worked at Friends Provident, a National IFA, HSBC, Lifetime Connect, and now the Openwork partnership. His LinkedIn profile says he has been helping advisors to look amazing since 1987. Please welcome to the stage, David Owen.
Thank you for the introduction, Kevin. So, yeah, I've been doing this for quite a while. And it's really interesting, and it's good to see so many of us today not wearing ties as well. I grabbed in the wardrobe today and grabbed a tie, and it was the first tie I got hold of. And I had to do a double check. You can see it doesn't fit me quite right, and there's a story. Because one tie is my father's Royal Marines tie, and clearly I can't wear that because that wouldn't be right. But the other tie was my brother Rob's. And this was his Willfield High tie that I keep. So Rob, at the age of 21, was driving his motorbike, gone to see his girlfriend, they got a small child, and was killed on the way home from work. So, well, from his girlfriend's to get to work. And, you know, I think all these different things, all of us, listening to Mike earlier, we're all being touched by incredible sadness. And I think, you know, we're all, some of the statistics we have, you know, for example, in this room, according to Professor Hannah Fry, 9% of us will currently have malignant cancer. It's a fact. It's a fact. You know, it's just going to happen. We can't get away from these statistics. We're going to be touched by these horrible things all the time. You know, another fact is that where you get 22 people in a room, 2 people will share a birthday. It's another fact. It's just probability. Another one is where you get more than one Welsh person in a room, they'll be claiming it was a good World Cup. All right. Yeah, barod ti'n iawn. So you've got that. So we live in this life of probability helping people. In Openwork, you should realise we've gone through a bit of a journey. And I'll weave this into what I'm about to talk to you in the next 15 minutes. Because you think about it, who were we before? Hambro Life, Allied Dunbar, there's a bit of smattering Hill Samuel, smattering of a few others. Then we come Zurich Advice Network, then we come Openwork and Openwork Partnership. And those people are the same people all those years ago, a bit like some of us would have gone through that training, the 11th floor, the Rotunda, Birmingham, 1987. A guy called Simon Hopkins, an ex-ship purser, was a brilliant presenter, did 42 impressions. This guy was absolutely fantastic, and in his heart he believed that the foundation of everything we should do should be about insurance and assurance. And we did the broad concept, which we all did. Remember that broadcast? I put it on LinkedIn the other day and people go, this is fantastic. You think that's what we all did. You train new people and they go, this is amazing. What is it? Remember, where are we now? Where do we need to get to? How do we get there? And what's the safety net we put underneath? That safety net. I think what we've forgotten, which I'll take you through, is that safety net. And this is some of the things we're facing off as a community, Penny, not a network, as a community of 4,500 advisors about how do we bring consumer duty into action. Now, first of all, listening to Lizzy, I think consumer is the wrong word. I noticed the FCA are already calling it the duty. You think they aren't consumers. They shouldn't be consuming. That's a capitalist word, isn't it? Sure, that sounds like they're switching and ditching every 6 months. What we're doing, we're getting people to do the right things. Now, there's 3 legs to this bar stool of consumer duty. There is the evidence. Now, that's a fascinating one in itself, and I'll come on to that. There's value, and there's also price. Those are 3 legs. So what we've got to do is make sure the bar stool fits the customer, and none of those legs are out of kilter, else it's not going to work. So from a distribution point of view, this is the tricky thing we've got to go over. Now, what we could say, we were talking about this earlier when we were having a coffee, is we could say we've got it right already. We don't need to do anything, but that's denial. I think we can always do a little bit better. I use this phrase in our business called match fit. You know, quite often we're the only profession that trains on the pitch. Well, what we should be really match fit all the time, because we're serving these people, we're serving these clients. As soon as we get to speak to somebody, we've got to give them the ultimate optimum results. Now, there's a story in this, I'll tell you about the value one, I'll just tell you quickly, because I love it the other day. So we were talking about value, and I do this usual thing, I won't do it today, with sunglasses and the value of sunglasses. But one of my colleagues, Ashley, said, years ago, when we were called something else, there was a bit of a name. There was some research that was done with the network community, with the name of the brand, and the feedback was, have you stolen Swiss gold? So they thought, crikey, what do we do? What do we do? So what they decided to do is they would go, like any good company does that wants to soften its brand name, you introduce a fluffy animal as part of your brand. And they bought in a St. Bernard. So what they decided to do is they go around on the stands talking about this business, talking about whatever the network was called at the time, with a St. Bernard. And they found somebody in Swindon who was a dog trainer who trained St. Bernards. So they used to go with the van, pick up the St. Bernard, drop it off on the stand. St. Bernard was perfectly behaved. But the St. Bernard was on a higher hourly rate than anybody who worked for the network. So what they decided was, price and value, what we'll do is we'll get rid of the St. Bernard, because Sheila, who works on the second floor, she's got a St. Bernard. But what they didn't realise is Sheila's St. Bernard wasn't very well trained. It was cheap, actually bit a child, and also deposited something from its rear end on a stand. So that is the warning if we try and get the value wrong. So what we've got to do, we've got to get the balance of value right. But I'll come on to all this with this. This is the key thing we suffer as a distributor. This is the two doors. And I stole this from my old colleague, Jim Austin, who'll no doubt watch this back on playback and pull me up on this at Lifetime Connect. It's the two doors. Because you think about it, a member of your family goes to get a mortgage and they approach two doors. Door on the left, one mortgage broker. Door on the right, another mortgage broker. Door on the left, they get a mortgage. Door on the right, they get a mortgage, and they also get the risks eliminated of not being able to pay that mortgage. Which one gets consumer duty? Same client, different attitudes, values, and behaviours by the person delivering advice. Totally different outcomes. One is right and one is wrong. Now, we keep talking about this as a profession, as an industry, but the rate of mortgage protection largely doesn't increase. Now, I know as our community network, we've won awards for this, which is great. Settle in the business is fantastic, but as we say, that the mantra Settle gives is you either do it, you either refer it, but you don't not do it. You have to have that conversation with people. And I think that's a challenge we've got to have to consumer duty, is to make sure we're on the A game, first of all, with the right principles to have that conversation. Then we've got the next one, another two doors. Now with these two doors, same situation again. Another member of your family goes up the steps to the left, goes to the steps to the left. First of all, there could be a conversation here, because I've never told my other brother who survives is actually in a wheelchair, so he'd be absolutely knackered at doing this, but that's another story. So what you do, door on the left, you go through that door, mortgage is arranged, protection, like to call it assurance, is put in place. It's put in place, great. But what they'll do, they live over the brush, they've got 8 children, modern family, different previous relationships, always complicated in it. So what they'll do is they give them a joint life policy, standalone kick, sort of things Kevin was talking about. So box ticked, they've had the conversation, they've done stuff. Door on the right, they go through, do the mortgage, eliminate the risk. 2 separate life policies, written in trust. Do the critical illness cover, life cover built in, and they do family income benefit, written in trust. So what we've got there is, straight away, you could say, I've done the protection event, I've done it, but 2 completely different outcomes again. 2 completely different outcomes. Now, I think we're only going to get over this, obviously by high standards within businesses, assurance checking, but also by education. You think about the education, I'm also on the committee of REAP, it's supposed to be called, which is quite worrying for some of you who know me, the expert committee within one of the regulatory, one of the examination parts of the industry. So when we sit on there, you can recommend assurance and insurance without any qualifications other than your mortgage qualifications. Under consumer duty, how is that right? And then if any of you have done the CII paper, it doesn't take that long to study. I did the financial services diploma for doing regulated investment advice in 3 months. So, and we're doing something really complicated. You think trusts, hearing Mike about his situation straight away, you think, I was sitting there thinking, that should have been written in a discretionary trust with the ability for the trustee to have the discretion to distribute the money where it should go. Right money, right people, right time. Very easy to do. Very easy to do. But what we've got to do is make sure as distributors, the challenge we've got to do is to make sure those things are done right. So I think what consumer duty is, or the duty for us as a distributor, is just cranking that handle more and admitting where we aren't strong enough, where we aren't giving the right outcomes to clients, and doing something about it. Really doing something, making sure on 100% of occasions people have the conversations, and then we're reaching more people. Last thing from Lizzy, I was listening to, I love my behavioural science, I'm just on my Joe Wiggins book at the moment. So I think Vanguard have done research on investment advice. Now bearing in mind they've got a robo platform in the States, it's massive. 80% of their customers said they wished they had a one-to-one advisor. So we've always said right from the start, 11th floor, the Rotunda, Birmingham, Simon Hopkins induction course, 1987. Protection, insurance has to be sold. I think what we've got to do is use this duty as something to get out there and reach as many people as possible, have the proper conversations, and also admit when we haven't got the right knowledge to gain that knowledge and make the right recommendations, and then be transformative for when those horrible, horrible things that happen in life happen, that people have the right things in place. So thank you very much. Thank you.
Thank you. To our three vastly experienced speakers. I will now be joined on stage by four vastly experienced panellists. Please welcome to the stage, firstly, Steve Bryan from the Exeter, Zanele Sibanda from Towergate, Naomi Greatorex from Health, Protection and Solutions, and Joe Penrose from Guardian. So let's get right to it. Zanele, please, I'd like to come to you first with a question we had the other day. Is product development real, or is it all just a gimmick?
Yeah, I think in order to answer that question, we probably have to step back and look at where we've come from as an industry and where we are now and what we need to do in order to make it worthwhile. We've come from, fair to say, insurance is boring, complex. That's where we started. It was basic, boring, complex insurance. We then went through a phase where everybody wanted to be exciting and everybody wanted to be innovative and everybody wanted to be first. But what that then did is that it created a long list of bells and whistles that everybody had, and you have to question what was the real value of those bells and whistles that were tagged on. When you really, really look at it in real terms, how much of that can a consumer really use and how much do they use? I do wonder, though, whether we have created that problem as an industry in terms of the number of definitions because of the mad dash to the awards, the mad dash to the comparison tables. You want to be at the top, so you're going to break down all your critical illnesses into goodness knows how many. And perhaps that's a problem that we've created.
From my point of view, I think the complexities in this room. I don't think we've got any. Well, we're all consumers, but there aren't any consumers per se in this room today. But there's product providers, there's portals, there's comparison sites, there's service providers, there's advisors. All of those people are part of this product development process and probably responsible for the situation that we find ourselves in. But let's not lose sight of the fact that what we actually have available today, the products themselves, do a fantastic job. So let's tick that box first. I'm going to be really crude. Life cover's life cover, isn't it? How innovative can you actually be? But from my perspective, the complexity and the arms race or the features race, that they're just, I guess, consequences of our own actions in trying to differentiate ourselves. But actually, why do we need to differentiate? Who are we differentiating for? There you go, I'm asking a question now rather than answering one.
I think that it takes us back to is that differentiation so that you can be top of the tree at the awards? Is that differentiation so that you can be the ABI plus when everybody else is ABI? When you look at the frills, the bits around the edges, how much of that is actually used by consumers, and do insurers therefore tag it on because it's cheap and cheerful and nobody will use it, but it looks good on paper? I think we have to consider all of these things. And yes, death is death, you die, it pays out. But part of the problem with the challenge with our world is that we're seen as boring, we're seen as complex, we're seen as the people who buy the policy don't actually get to see as much of the benefit as do the people they leave behind. So we have to give the purchaser of that policy an opportunity to enjoy the benefits of that policy, even if they never make a claim. So I think there is something to be said for the additional value that is tagged onto policies, but let's make it relevant. Let's make it worthwhile. Let's make it something that people can use.
So following on the theme of customers, from an insurer's perspective, what's it like to do customer research? What sort of processes do you go through? Maybe take that one to Jo first.
Yeah, I guess there's lots of different ways in which we can do that customer research. You can do what we call qualitative research, which often starts with really understanding the customer. Pure ethnographic research where you get into that customer's shoes, spend time understanding the everyday lives of those customers before you even start talking to them about any products. And then you can iterate that research as you go through the sort of development process. You can use that to feed into the design. And then after that, you can sort of iterate and go back to consumers and customers and find out more and finesse that potentially with, I don't know, the qualitative type of research where the quantitative type of research where you're getting a much larger number of customers to give you feedback on features, etc. But starting absolutely with understanding that customer in that segment, that target, sometimes referred to as a bullseye segment, trying to understand that really is the best place to start, in my experience.
And I think, when you, following on from that, Jo, the kinds of things that have stood out for me from a distributor perspective over the last year are those insurers that have brought out changes to things like the mental health underwriting. That's been revolutionary. I mean, there's one or two providers that have made some real changes that you look at and you can genuinely see the reason why, the rationale and the benefit to the end user.
The most important things that the customers came back with as needing from providers were, I'll read it out, customer service and claims payments. And that's nothing to do with product features whatsoever. This is what customers are buying. They're not buying a bit of paper that says you've got all these features. They're actually buying the claims service, the customer service, the adaptability perhaps of the product as their lives evolve. Because it's not a one-stop shop. You buy a life cover at 25, your life changes a lot.
Do we think products are flexible enough?
I would say historically they've been very inflexible, and ultimately the consumer is the person that really suffers from that. You're seeing an introduction of things like reviewable exclusions on income protection with some of the insurers. I think that's really important because, to give you an example, I've got a client at the moment who's had some physio sessions, he's got back pain, and he's going to have a back exclusion on his income protection, which is actually such a huge part of that insurance is around musculoskeletal. And what you don't want is for that exclusion to be for the whole term of his policy. So you want it to be relevant. If he doesn't have back pain again for 3 years, you want him to be able to go back to the insurance and say, I'm okay, can you take the exclusion off or at least review my contract? And those are the important changes that you want to see in insurance companies really thinking about who's doing that and who's not, and if you're not, then why not? Because it really isn't fair to the client to charge them a premium for something which they can't have.
We sort of assume that a customer at the point of taking out the contract is going to sort of not really change that much over time. And I think there are, I've worked on projects in the past where we've tried to look at how we could innovate so that when you take out the contract, it's based on you as an individual at that point in time, but over time you can alter aspects of the cover, add additional covers, remove additional covers so that it extends to the full life of that customer. You have to then think about, well, how's that going to fit in with the rest of the market? You go with something that's too radical and it's very difficult to get the market to bring that on board. So what you find is everyone's trying to change a little by little, but there's nothing really that's radically different, apart from the value addeds and the number of conditions, from the insurance industry I entered the best part of 35 years ago.
I was actually working in 1987 when the Financial Services Act was passed. Some of you younger people will know it as a historical document. There was a lot of debate then about, this thing, know your customer. And it's exactly the same debate we're having now with different words about consumer duty. So that tells me in 35 years the industry hasn't changed a great deal in terms of its culture if we need to have regulation to remind us to have a duty to a consumer. That should be second nature to any industry. So the legalistic approach and the culture, I think, has to change enormously before we start adopting consumer duty properly.
The answer is in the behavioral economics that Lizzy was talking about, that, do we know how the uninsured want to hear about protection? Because what we know is the ones that sit in front of us, and we tell them protection is a very emotive subject. As soon as you talk to somebody, they get it and they buy it. But what about, the uninsured?
It's getting customers to that point, isn't it? How do you get a customer to the point where they understand that this is something that they need?
Thank you all. Thanks to our speakers. Thank you all.
Thank you.